Well, the RBI action against NBFC, specific business segments, etc., continues to dominate mind space. And the question many are asking is the sector, the NBFC sector as such, perhaps going to come under a bit of pressure, both business-wise and, of course, then a little bit of derating on valuations as well. We have a veteran really joining us now. Aseem Dhru is Managing Director and Chief Executive Officer at SBFC Finance. Mr. Dhru, great to have you with us here back on the program. Thanks very much for your time. Prashant this side. Before we get to what SBFC is seeing on the ground in terms of business, etc., let me just get your thoughts as someone who's kind of dealt with the RBI for decades now, who's headed large organizations. How do you see what we are seeing now from the RBI? The frequency of action perhaps a little more now, and it's moving beyond fines, etc., which I think was the preferred route for the RBI against, if you look at 2023, 2022, etc. Stricter action in that sense. How do you look at it?
Thanks, Prashant, for having me. So financial sector worldwide it tends to move from booms to busts, and sometimes it creates its own buzz. So world over, you would see that regulators keep wrapping the knuckles of companies that do not stay in line with the regulations. And without guardrails, you cannot really build institutions. You cannot really build the future. And the problem with financial services is that when it misbehaves, the price is paid by the larger economy, and the price is paid by the taxpayers in the end. So because of the regulatory sensitivity of the sector, it is important that the governance standards there are kept at the highest level. And especially when you have Goldilocks scenarios as we have been having last year. Generally, mistakes are made in bad times. And when you have these kind of a situation where there is a go-go time in terms of lending, some amount of caution and some amount of guardrails are put around. The messaging from the central bank is very clear that they don't want to take an easy position. And so far, they've been fining. Now the message is even more stricter to all of us players that either we fall in line, or we would be put in line.
Okay, but the question here, Aseem, is, hi, good morning. Is the RBI just being proactive against financial institutions at risk, or are there some serious governance issues that, that have come to the forefront?
So for the first time, the regulator usually our regulators have always had a battle with the macros. For the first time, our balance sheet, all the three balance sheets are in a very good position. The corporate India balance sheet, the external balance sheet, and the fiscal balance sheet. So at least on the macro side, we are on good footing. They have to always watch what can upset the apple cart. Now, behavior of players within the system can upset the apple cart of growth that India is now on the path of. And they are doing proactive watching of this space. And they have taken it two notches up, saying that now we're not just watching it and we're not just punishing it, but we will come down heavily on anything which is not in line with the regulation or puts the system at risk in any way.
Right, so Mr. Dhru, what you would say is it's a company-specific issue and it's not an industry problem, right? Are we getting that correct?
So see, while action right now has happened on 2-3 NBFCs, and that is what has come to light. The reality is that if you see the history in the recent past, a lot of large banks have been fined heavily, which is not the norm in the past. So the regulator is clearly upping the ante on two things. One is its regulatory oversight itself, and second is that when you have repeated observations, or repeated observations coming up, and you are not fixing those issues, then they are willing to go all the way to ensure that you fall in line. So it is not just signaling for the NBFCs as what right now you are led to believe. It is more a signaling to all the players that you need to fall in line with what is expected.
Mr. Dhru, well put. Mistakes happen during good times, right? And the go-go markets that we are in, it tends to get inflated most on the finance side. I'm not talking about any entity in particular, but generally it shows up there the most because people get creative, etc. But have the level of inspections, audits, conversations increased quite a bit over the last many months? Not just with the RBI, not just with your organization, but you would have a sense of what's happening in the industry as well.
Yes, so see the central bank has been proactive in terms of first they came up with a scale-based regulation and said that you need to have different methods of regulating entities at systemic level of risks, and people who are at a high level of risk need a high level of monitoring. Then there are people at the medium level of risk, and there are people at the bottom. So the bottom gets a lighter touch regulation. But once you enter a medium scale, the level of regulation, the level of discussions, the level of intensity of data collection goes up quite substantially. And as you enter into the top tier, it goes up multifold. So now, just as they were doing for banks earlier, see, what has happened in the last 1 year is that all the regulatory arbitrage that was there between banks and NBFCs have got taken away. So right now, there is no differentiation between the way an NBFC is regulated from the way a bank is regulated. It is that top tier NBFCs are now facing the same level of regulatory scrutiny that the top tier banks experience. So to that extent, the system is becoming a lot more safer. But yes, to some extent, the central bank's job is like a veterinary doctor. While it is doing it in the interest of the animal certainly protests.
I like that analogy. Thanks. I'll always remember that when we see more central bank action. Thanks a lot for joining in and giving us a view on how things could shape up in the NBFC space. But for our